All right, so we got 50 basis points cut, not 25. I must say I'm pretty surprised, given the political ramifications of such a decision. The fact that unemployment's still low, according to the official numbers, and the economy is strong. There's no real reason to cut by 50 basis points. Inflation seems to be under control. So I'm not going to ramble into politics and the overall scenario going on in the States. It is a little confusing. Obviously, it's a chaotic and completely weird year. Very difficult to trade in. And looking at these charts, I'm on the Forex charts right now. You can see the whipsaw that we got on the euro and the pound and the dollar yen. Not so much on the dollar index, because the pound, the euro, the yen, and a couple of the other currencies in that index kind of leveled themselves out. So dollar index on the bottom left-hand side of the screen, pretty well supported. I still think the dollar is probably likely to go up more than down, but that's not what we're seeing at the moment. We're seeing the euro and the pound both up with this incredible whipsaw. I'm hedged on the pound, was a little bit subject to this whipsaw yesterday after the FOMC announcement and what Jerome Powell had to say, and some of the, I would say, softball questions that New York Times and various other reporters questioned him on, set him up for the right answers. There was no real easy answer for why they cut so dramatically a few weeks before ostensibly the biggest election that we've seen, at least I've seen in my lifetime, and that includes Reagan and Bush and Clinton, both Clintons. So very interesting. But let's have a look at these charts very quickly. So generally, basically, this point should push the markets up dramatically. The dollar should be collapsing, which it's not. Bitcoin and gold, we're looking at this chart. Bitcoin soaring, that's expected. Gold, a little bit muted. Look at that big whipsaw in gold, huge spike up. Let's zoom into that chart because it's quite an interesting one. Up to the level that I thought we might reach before turning around. So I'm completely hedged on gold. I'll be watching what happens in this block here. But given the 50 basis point cut, one would expect gold and Bitcoin both to power on upwards. The whipsaw was very strange, that big whipsaw on gold, and not so much on Bitcoin. Bitcoin a little bit, but was more firm, stronger. Silver picking up a bit of a bid as well, but we're into this big order block. So I really don't know what's going to happen. I'm a little confused right now. I think most of the market is. I've been watching some of the commentaries from some of the big commentators, some of the perma bears and perma bulls in the market. Some people think inflation's now going to dramatically increase. Some people think it's on its way down no matter what. People are talking about M2 money supply being more important than interest rates. Of course, that might be the case. But the interest rates are emotional and they send out messages to the economy, to traders, to the public, and to the political arena. That cannot be underemphasized. So basically, I'm very long on Bitcoin still and holding that. I like that. That's moving up powerfully. You can see our entry positions in there. We're starting to build a nice long position. Gold, I'm hedged. Nothing on silver. Told you what's going on the pound. On NASDAQ and S&P, I'm looking to, just to keep this simple, we've got a whole bunch of positions here. I'm long on Apple and Microsoft, but short on some of these others, including NVIDIA, IWM. IWM, we're now hedged after that spike up to the 200 period moving average. Was that the 50 or the 200? That's the top Bollinger Band. So spike up to the top Bollinger Band precisely, which is precisely where we got hedged. I couldn't resist hedging this because there was a possibility with a 50 BPS cut that everything could have just gone ballistic. It didn't. Anyway, we're hedged on that one, and we'll unhedge some of these as the market settles down. But we're also short on NASDAQ and S&P. I'm just looking at the S&P. My plan, which I highlighted in yesterday's video, is to sell into this block, my next tranche. There's my first one. And then if that doesn't work, if we do carry on powering higher, that's the next spot, the center of the top channel, which we would then break back into. We're still not back into this channel, by the way, and this will be the third retest of the channel breakout. It's a very, very important and key level, and well, let's see what happens there. I'm going to sell some more if we get there. If we carry on moving higher, I will hedge that. Same or similar strategy for NASDAQ. Going across to natural gas, 2.25 remains the number. Not much affected by the FOMC, but because the dollar initially strengthened and then weakened, commodities were all a bit of a flutter as well. We've come back down to this key support level. I'm hoping that we'll hold here today, 2.25, and we've got the storage report coming out later. So let's see how that goes. I'd be surprised if we collapse below here. Let me just go back to this chart. Here's the 200 period moving average. We're right on top of it. We're still above the 20 and the 50 on natural gas, but we are below this channel. I'm not too worried about this channel breakout. This is the key level where the 200 and this big, red, long-lasting, eternally powerful support level lies at 2.25. With a bit of luck, Storage will be bullish and we'll hold above there today. We're short on WTI. Once again, I'm not going to go into all of this today, but this will be affected by the dollar, of course. I have a short position on here. We've been selling all along, taking profit now at the bottom. We started selling again, and I'll look to sell into that sort of blob at the top there. Looking for a move back down into the bottom of this channel, towards the bottom of the channel, and into the low 60s on WTI. And then the only other interesting thing today is the South African Rand trading against the US dollar. This is denoted in USD ZAR, and we've talked about this many times. This is going according to plan. We're short from there, and from there, flat bottom breakout on this last move down through that big channel. Let's go to the weekly chart, much easier. And that's my plan on the dollar South African Rand, going perfectly and beautifully so far. There's the 200 period moving average. We'll bounce off there, no doubt, at 1685. Call it 1680, my favorite number, 80s and 20s. We'll bounce off there, probably get back to the underside of this flat bottom break, and then carry on down towards the bottom of the channel. So that's the South African Rand. I'm also short on the pound rand. VIX we have nothing on. We're also long on TLT. That came back a little bit yesterday with that rate cut. And then going across to commodities, well, we're long and profitable on sugar, soya, and wheat, and we're hedged and slightly negative, but locked in and protected on coffee, corn, and cotton. Really messy at the moment, but slowly building a base on sugar and soya and wheat, and hopefully those will carry on moving up. Cocoa remains in this triangle, and I'm looking for an entry to go short on cocoa, either at the top of this red line that I drew in about 2 months ago now, or on a breakdown and a retest from underneath this channel line. Beautiful channel line, so breakdown below there, bounce back, retest from underneath, and a move down. That's cocoa, and we are not in position on that, looking to get into that later on. Well, I hope you enjoyed that, folks. Have a great trading day. It's been really difficult, and I hope you didn't all lose your shirts on this big whipsaw. That's why hedging during these difficult periods is a really important and useful tool. Well, I'd really appreciate your subscription to the channel, and a thumbs up would be really bullish. Take care.
Sentiment in vogue, never seen them so bold. Feds move, tweaking the scenes, whispers of gold. Energy, sector quake, oil jumping to new highs, market bulls in the